Good morning, Jags. This is Fahad. Today is Monday, September 14th. Let's get started. A jackpot day for us. As a reminder, this is the trade idea that was issued on Friday, September 11th at 12:52 p.m., in which we recommended buying um, Immunomatics or IMMU October 45 call options for $3.30 or less. And I was looking for a technical breakout. I had absolutely no idea, not even in my imagination, that this company would actually get acquired over the weekend. My simple view was that I was looking for this very specific catalyst that was coming up on September 19th, and I wanted to be positioned for that catalyst with short-term upside straight call options because I figured that based on the interim data for this clinical trial that that company has provided already last year was already showing an ORR or response rate of above 29%, but the consensus going into this event on September 19 was between 20 to 25%, which seemed like a very low bar to beat street expectations, and anything above 29% would have made this a stock fly just based on the clinical data. So that's what I was looking for. And then we got this really big positive news over the weekend that Gilead Sciences is making this acquisition for more than $21 billion, which is more than 100% premium where the stock traded on Friday. So this stock is going to open at $87 per share after closing at 42 and change. And when I'm looking at these call options, these October 45 call options that we own, they're going to open. We bought them for $3.30, and they're going to open for about $42 per contract. So that's an approximately about 1,200% return over the weekend on these call options. So just set an alert or just set a closing trade for $42 per contract, and it should execute right at the open. So giddy up to everybody. Huge win for us. Now, with that said, let's move on. Lots and lots of M&A stories this morning. Verizon is buying the reseller Track phone for $6.25 billion. Merck is buying $1 billion equity stake in Seattle Genetics, which is another one of our favorite companies. And you have also Dow Chemical is shedding its Gulf operations, Gulf business for about $600 some million. And then you have, NVIDIA acquiring ARM Holdings from SoftBank for $40 billion. And of course, you have this Gilead Sciences buying Immunodynamics for, $21 billion. So lots and lots of M&A stories in pre-market this morning. So that's what's going to drive the price action, a lot of sectors and stocks. But with all of this said, I do have a sector I would like to quickly discuss and two stocks on my watch list. Now, both of these were discussed in chat room on Friday already. So I'm really just rehashing my bullish views over here with some added fundamental color. And the first one is CF Industries, symbol CF. I believe this has a technical setup for a breakout that should carry the stock all the way to $37 per share. So I think that this minor pullback and consolidation for the past month or so is about to get resolved. Stock closed at 33 yesterday. There's a bit of an air pocket above this, and I'm looking for a move to about $37.50 to complete that air pocket all the way up. So here is my line. Another way of looking at it is this chart. This is the chart that I showed in chat room on Friday. And you can see that this is a very defined chart, constantly bouncing off the trend support. And each time it has done so, when it has retraced to the trend support and we have bounced back, we have seen the volume surge sharply. That happened back in May. That happened once again back in late July. So I'm expecting another implied volatility spike over here, as well as the volume to spike sharply as this starts to break out potentially today, tomorrow, or later this week. So keep an eye on this one. And this should easily carry the stock all the way to $37 per share. So that's CF Industries. And if you look at the option activity, it does have weekly call options. So you want to be mindful of what's happening today, tomorrow, or the rest of the week. in the September, regular September and the September 25 weekly, these weekly call options, they are penny wide, and there should be some action in this, and we might be able to capitalize on some of those trades. So that's CF Industries. And the next one is NTR, or Nutrien. I showed this one too in the chat room on Friday. Fantastic looking technical setup here for a breakout. And some of you may already be positioned into this one based on a discussion. But if it starts to clear this $40 resistance, then NTR should easily go into this gap, this air pocket that's open up to about $43 per share. So on a percentage move based on where the stock closed on Friday, this is another one where I'm looking for about 7 to 8% move to the upside. And NTR also has pretty active options. There's 13,000 open interest that is sitting in the September 40 strike call option, so keep an eye on that one as well. And let's see if this thing starts to break out from that. So weekly stuff is basically what I'm positioned in. Now, with all of this said, there's a couple things fundamentally that you need to keep in mind. Moving on to CF Industries. The key reason why this is fundamentally attractive over here is because the nitrogen prices have started to move higher. There's a couple reasons for that, but first note that the nitrogen market, and let me just keep this chart up. This is NTR, and the other one would be CF Industries. So this one. So nitrogen prices have started to move higher. And the reason for that is there's evidence building that China FOB range is starting to settle after lots of volatility in early part of the year, between $220 per ton to $260 per ton. The midpoint of that, based on the most recent channel checks, is starting to actually move up to $250. And that would be slightly above the consensus view, as well as what the management provided in terms of its guidance, which was about $245 per ton. Now, given the volume of sales that this company makes, a small move above when the spot price moves slightly above the contract price, and those contract prices get rewritten for the higher prices, it has a material impact on the EBITDA line. So for example, the company guided 1.3 billion to 1.6 billion EBITDA range for fiscal year 2020. And it seems like that based on the midpoint of where the nitrogen prices are going, they should come in near the upper end of this range, which is 1.6 billion. And in a blue sky scenario, if the prices actually hold firmly of nitrogen at $250 per ton all the way through the end of the year, then an easy chance the company will actually exceed even its upper end of the guidance. Now, considering that these prices have been moving up in the entire time in the third quarter, and the third quarter is about to come to an end, there's a slight chance that the company may actually pre-announce earnings either before the month of September is over, so that could happen in the next couple of weeks, or if not, then we're just going to find out in a positive surprise, element of surprise, when the company reports earnings sometime in October. Only one analyst I know so far, which is Credit Suisse, has started to move forward estimates higher based on the price movement. So for example, Credit Suisse took their fiscal year 2020 EBITDA guidance from 1.4 billion to 1.47 billion. In the fiscal year 2021, EBITDA estimate went from 1.41 to 1.45 billion. So there is that on CF Industries. And on NTR, if you look at this chart, which has a beautiful setup for a technical breakout, and here's another way of looking at it, Nutrien is a separate story which is playing out for exactly the same region. In this case, this company benefits from both potash as well as nitrogen prices, and both of them have started to move higher, mainly because corn acreage in the United States is down, while Belarus, Belarus is starting to see some supply disruptions out of Russia. I discussed this also in chat room on Friday, that there's an article out this from Wall Street Journal that there's a major strike that is taking place in Belarus by potash miners, which is pressuring the president, and this is causing the this is causing the nitrogen prices to basically start to move higher. And if this happens, I think this has a potential breakout setup and should go all the way to $43 per share. So keep an eye on both of these stocks. That's it from me, Jay.
Morning, everyone. Taking a look at Monster Beverage today, ticker MNST. Stifel was out with a note last night saying that they are anticipating the company to imminently introduce a watermelon flavor variant under their Ultra family brand. They view this introduction as logical considering the success that Red Bull has had with their watermelon flavor, which launched this year. They think this new flavor could be a meaningful contributor to its sales. As for Red Bull, it accounted for 3% and 5% of their sales over the last 1 and 3 months, driving 29% and 40% of year-over-year company sales growth. So you have that possible new flavor. You then have Stifel saying that they anticipate the company will introduce 2 new juice variants, Papillon, which is a peach flavored juice, and then Chaotic, which is a reformulated Chaos brand. Now Monster has had success in recent years with their juice brand, with 3 of their SKUs, Pipeline Punch, Pacific Punch, and Mango Loco, accounting for 7% of sales for the 12 weeks ended July 26th, and all of that contributing 11% of company sales growth over that same period. This is notable considering that these flavors have been available for more than 2 years. All in all, Stifel expects or anticipates this innovation to be on the shelves over the next few months, with the watermelon variant likely sooner. They also view all of this pending innovation adding approximately 400 basis points to sales growth. And the final thing I would point out is, with all of this potential product development, you still have to keep in mind the other catalysts that they have, and that's the anticipation of a hard seltzer rollout or introduction sometime maybe later this year or in 2021.
Interesting stuff. And on top of all this product innovation that's coming, let's see how this thing, Monster Energy, these new products fly off the shelf. I do want to point out the sequential improvements that we also saw. Naturally, the month of March and April was down for almost practically everybody despite hoarding, but the recovery from that has been quite remarkable, where we went from minus 22% in April to high single digits in May and June, and then July was sequentially improved again, was up 16% year over year. So company actually inflected positive within 3 months after the shutdowns. And overall, the e-commerce for Monster Beverage was up triple digits percentage by July. And I wonder if those channel checks have actually held up throughout in the quarter. If July was this strong, and if that continued to pour into August, and naturally we don't have September data yet, then we could have a monster quarter coming. We could have a monster quarter from Monster coming. And so something to keep an eye on. So Jay, ahead of earnings, that's going to be a while out, but keep an eye for any kind of channel checks. But good stuff. Yeah, fantastic. All right. Thank you. Chronicle.
Morning, Fahad. Have a preview of something that's in the pipeline. So as we're building out JaguarMedia, the plan has been to gradually introduce more series into the library, so that it's not just Chinese stocks all the time. And on that note, the next series we'll be launching in the coming weeks is called Jaguar Investing. This series is going to focus on low maintenance, long-term investing ideas, which is my strongest suit because I live 12 hours ahead of the US. So we're talking anywhere between 6 to 24 month time horizons, or perhaps even something for people to put into their retirement accounts and compound over time. And the idea behind this project is to complement all the shorter term swing trades that we're used to recommending on Jaguar Analytics. And so the kinds of ideas that we can expect from this series are more along the lines of, say, the Fastly call that we made around late February when the stock was in low 20s, or going back to last year when we made the bullish call on Central Puerto, symbol CEPU. If we remember, the stock was trading around mid to high twos at the time, and within the space of several months, it doubled nicely to roughly 5.5. Pan American Silver is another good example. There was also Intelsat, which unfortunately didn't work out, but it was still worth a gamble because of the potential returns if it had gone right. But those are the kinds of ideas we can expect from this upcoming series where, we're not overly concerned about trying to time our entries or nickel and dime the market, but rather we're looking for opportunities that have the potential for outsized returns over time. So even if the ideas don't work out right away or don't work out at all, the beautiful thing about this strategy is that we really only need a couple of home runs each year to make decent returns. So for each episode, we're going to be looking at individual companies. Specifically, we'll be going through the long-term bull case as well as the risks and upcoming catalysts. And we're going to be taking a much more comprehensive approach when looking at their financials and debt structure. We'll also be digging into their payout and shareholder return ratios and trying to project future revenues and cash flows. And lastly, we're going to be pointing out specifically how and where we intend to enter the investment and the returns we're targeting. So there's going to be a huge emphasis on both fundamental and quantitative analysis this time around, because what I found when it comes to long-term investing is that it's important to have strong fundamental conviction in our positions. Otherwise, it's almost a guarantee we're going to be easily shaken out or we'll tend to take profits too early. So the research that we're going to be doing for this series is going to be especially thorough so that we know everything about the companies and we have conviction before we commit capital and invest. And the last thing is the frequency of episodes is going to be give or take once a month so that we don't run the risk of having itchy fingers and over investing in too many companies, which is something we want to avoid. So I'd say we can expect about 10 to 12 investing ideas annually from this series. And it's going to come with an attached table, which keeps track of all the ideas, sort of like for a weekend research. Plus, on a periodic basis, there's also going to be intermittent episodes with updates on the companies we've looked at already. And we'll also address any questions that people may have. So this is something different from what we're normally used to, but we're excited about this all the same.
Fantastic stuff, and I'm glad that you brought this up. I am absolutely positive that there's a lot of clients that will be listening to this, and they will be excited about the investing series that we're going to be launching in JaguarMedia. For many, it's going to come down to just owning stock instead of actually trading call options around the positions that we will discuss and try to time them perfectly and such. So, but that's okay. Because many would actually prefer that. And given the extensive nature of the discussion that we'll have in this series, along with the full research notes that will be attached to it and the updates that will be frequently provided for each of them, it's going to keep everybody well informed throughout in the investment holding period in those positions. So I'm looking forward to launching that. I do want to quickly point out to everybody that this is the JaguarMedia site in front of you. Now, the site is going to slightly change in the next couple of weeks. I have the web developer trying to reorganize the slide slightly better, because when we first started this last year, was just me, in front of the camera myself and posting the videos. I'm sure you've all seen those before, and the frequency of that was only once per month or so. But now with me and my research team behind me, basically every day we are posting stuff on this, and the video content library continues to sharply go up. In just the last year or so, we have now posted 101 videos in this. And I think if it was 101 videos over the last 12 months, we're going to have 3 times as much over the next 12 months. So you can just imagine. So we're going to reorganize this website for better navigation purposes. We are going to bucket it better by groups, the Chinese series that we have been running, the conversation series, the investing ideas, and all of those. We're going to bucket them a little bit better. And hopefully this will become a robust platform to come and just take a look at anytime you like and listen to these videos. Perfect. Thanks for that update, Chronicle. Avo.
Morning, everyone. Looking at Smartsheet this morning, just reading some updates, or rather analyst notes from early September. So at the beginning of September. Now the company's already reported, it did actually report on September 2nd or 3rd, I can't recall exactly, but it also coincided with all the market pulling back. So it didn't place its timing very fortuitively. Now, compared to, first of all, I don't think the stock's ready to perhaps go into yet. I think it probably needs a little bit more to smooth out the overs, or the MACD and the RSI, I mean, more the MACD than the RSI line. The company reported a pretty decent quarter. They actually beat their own estimates from the previous quarter, which was in June, by reporting some decent numbers. The only thing actually that they also, for fiscal year 2021, they increased their outlook. Now this was below their previous outlook back in June, but it was above the latest forecast that they had. Reading, for example, RBC highlights that the revenue growth was 41%, which beat guidance by 5.5%. Billings came in 5.5 or 5.7% ahead of guidance, which is good for upcoming quarters. They do highlight that there is still some pressure from small to medium business owners, but they also point out that the $50,000 and $100,000 contract expansions are pretty strong, which saw 78% and 92% year-over-year growth respectively. And also the net user adds were the best in the last 2 years at around 500,000. So I think there's some decent numbers that came out. Also, just one more thing to add from more recent commentary, it seems that August is setting up to be a record for pipeline build, which could again provide a good story going forward. So this is something that I think we could keep an eye on in terms of what we may see from options activity. I don't think we've seen much recently, and that's it for now.
Okay, so I'll just slight a bit of a devil's advocate, but we have not liked this name in the past, but just understand that the billings growth did decelerate materially. And that's why this stock blew up with sharp, large gap downs in the last 2 times it reported earnings. And now considering that the stock actually ran into earnings and then the earnings came out and that it was below expectations in terms of the billings growth, consistently highlighting decelerating trend, and the stock just basically gapped sharply lower. This happened in June and this happened again in August. But the bar is set low after these blowups. That's the way to look at it, where first of all, technically speaking, this $45 is a major VOP congestion level, which acts like a magnet, and naturally the stock is showing some resilience at that level, not wanting to go down anymore. So that's one thing to keep in mind. And then fundamentally, when you get 2 or 3 quarters of blowups like this, and sharp pullbacks from 52-week highs, there is a case to be made that the street is no longer expecting anything good, or potentially is framing itself to lower valuation, lower multiple, in the same kind of new lower growth rate than what we used to see from the company in the past. The company has the huge exposure to SMBs, the small and medium-sized businesses. Now, with that said, if you are right, and the annual contract values, ACVs, of the large customers is starting to improve sequentially, as I see KeyBank analysts also talked about this recently, and we see a sequential uptick in that particular metric, for the next earnings report, then that's where the element of surprise could come in, with the sentiment washed out on the street. And then I could see this thing make a very sharp run towards 60 and then break out at that point. But I think we're still far away from that. I think this needs to spend some time building a base around over here at 45 again, and then an entry could be had with a hard tight stop. But interesting look, something to keep an eye out going forward.
Yeah, and also in the 60, I just wanted to quickly add, in the $60 range, it was about $26, correction, make that 26 times sales. So at this price range, it's closer to the 2019 and 20, which is more reasonable.
It's
So not make it more attractive.
I understand that, but you know what? The thing is that when the valuation resets happen, you know, what is to say something goes from 20 times sales to 15, but then why not as go to 10 or 15? Because that's the thing. Because remember, these SaaS companies used to trade at a price level that was very normal for them for many years, between 6 to 8 times sales. And we're operating in an environment right now where 20 times sales is absolutely nothing. That's why these valuation resets are very acute and sharp and painful for long holders when they basically get caught in that. I do not know if we have actually seen that, but because if we're going to make a case that valuation is going to expand again based on, as contract value sizes going up, we need to be able to basically see some stark improvement from the 2 quarters of mishaps and then going forward from here. So I think that the jury is still out on that. Otherwise, there could be another reset coming with more lower valuation down the road. All right. I mean, you only have to go back to 2018 and you could never find any SaaS or every SaaS would struggle to maintain a valuation above 10x sales. And now it seems like that's a piece of cake. So very different time in the last year or 2 years, particularly this year. All right, we're going to stop here, but we'll definitely continue to monitor this stock, see how it bases over here, and if any option activity picks up or any fundamental channel checks, and then we'll proceed from there. That's it from us. See you in the chat room shortly.